And of course, largely driven by what's happening in the manufacturing sector. Of course, it is the Manufacturing Purchasing Managers Index, but we'll be talking more about what's going on with commodities in just a bit with Ada Akonobi, who is an economic research analyst with financial derivatives company. She joins me now. Good morning to you, Ada. Thank you so much for joining me on the program.
Good morning, Harriet.
So, from the PMI, we largely see there's been no movement. Of course, it's not unexpected, especially with the contraction in GDP minus 2.06, and PMI, of course, was expected to come in. And taking a look at manufacturing as a whole, that also contracted in the second quarter, about 3.7%. Just take us through what some of these issues are. Are they still the usual burning issues that we talk about on the program?
Well, we know that the manufacturing sector is still going through some challenges, mainly due to the unavailability of FX. And it's no surprise that the PMI showed a contraction. Like you rightfully said, above 50% is an expansion, below 50 points is a contraction. And we have the employment levels, inventory levels, and there's delivery times that recorded a decline, but then output actually saw an increase. That is no surprise, seeing that most stores, most manufacturers are still going through the challenges in terms of sourcing for FX to import these raw materials. And as we can see, if you go to most stores, we see that there's a decline in inventory levels. So that's beginning to actually reflect on most retail stores right now.
Yeah, but then we also see, at least for let's talk a little bit about the domestic commodities, the domestic agri-commodities. Harvest season begins soon.
Yes.
What impact is this likely going to have on commodity prices?
Well, the good news is it seems like, or rather, our domestic production is going, there seems to be some light at the end of the tunnel in our locally produced commodities, for example, rice, soybeans and corn. Kebbi has recorded a bumper harvest, and this is probably expected to taper down the price of most domestic commodities, particularly rice. Ebonyi farmers as well has seen that most consumers are beginning to patronize them. So now they're switching from imported rice to more locally produced rice. So the CBN anchor borrowing program is actually, that's progress in most states, and giving loans to most farmers and trying to encourage them to, kind of go back to farming and increase output. So that is literally showing in our total domestic production. And going forward, we expect domestic commodity prices that are grown locally to decline. However, commodities that are imported still go through the FX pass-through, which is literally increasing prices.
During the president's speech, yes, at Independence, he talked about the Federal Ministry of Agriculture and the Central Bank being mobilized to encourage local production of rice, maize, sorghum, yes, millet and soybeans. The target basically is to achieve domestic self-sufficiency in staples by 2018, the president says. Do you think we're actually on that right path if we're talking about, mobilizing local production?
I think we're on the right path. Like I said earlier, you can see that already in most of our locally produced commodities, for example, rice. So we can see they're churning out more rice, especially locally produced rice, like I said earlier.
But then you see, local rice is still very expensive. Just in the newsroom before I came on the program, someone was talking about buying Abakaliki rice, for instance. That was, yes, local rice, not Abakaliki rice, but locally grown rice, and a bag is 22,000 naira.
But then we have some locally produced rice going for 18,000 naira as well, and 17,000 naira. But that is marginally lower than the price of imported rice. So it's good in the sense that it seems like we may actually achieve some sort of self-sufficiency, as the president stated, by 2019, and that's a positive development in the agriculture sector. And investors as well are looking, this sends some sort of positive sentiments to international investors. We see some sort of partnership and investment in the agriculture sector the government plans to collaborate with Ireland as well to bring in some sort of science and technology to improve the agricultural sector as well. African Development Bank, the World Bank, and so there's been some sort of a collaboration and some sort of understanding between the Nigeria and most international organizations to revamping the agricultural sector. This doesn't happen overnight. It is a long-term project, and we are at the right step. And I mean, from the market survey that I actually went on over the weekend, most traders are saying that there's some sort of increased output, so prices are literally coming down. We have prices of tomato, gari, and beans, so prices are tapering down. So we'd expect this to go into the end of the year. But however, seasonalities, prices will go up because of increased demand.
So today is the first day officially for the month of, for the markets and every other person. So you're taking a look, and from your survey, what's your expectation? What's your outlook? How do you think that the market is going to fare? How do you think consumers will actually, price these items? Because consumer, production is still, production might be high, but there's still no money in the pocket to buy.
Well, if you look at consumer behavior, there's a lot of consumer resistance kicking in. So consumers have to make very informed decisions in terms of how much am I going to spend, and they have to somewhat rearrange their scale of preference and choosing what is most important. Now, like I said, most imported commodities are still high, seeing that the exchange rate the exchange rate at the parallel market, which most of them have access to, is between 450 and 490. But then when you go to the shelves, do I get this? Do I get the locally produced item, or do I, get the foreign item? So most consumers are now actually patronizing Nigerian products because they can't continue to afford. They can't afford imported.
So the call again for us to all buy made in Nigeria goods has come again.
Yeah, it is. It is a positive development.
All right. Thank you so much, Ada, for joining me on the program.